Good afternoon, everybody, and welcome to MasterChartsTrading.com market recap for the week ending Friday, December 5th, 2014. Today we'll take a look at several items on the agenda. The S&P 500 is stalling at new highs. However, market breadth is still bullish, so we probably will, continue to have a bullish posture in my view of the market. The Russell 2000 is at a critical juncture. It could go either way, bullish or bearish, and I'll explain what I mean. Sell signal was generated in AGG, which is a general bond fund, and we took profits in TLT as well, treasuries funds. Gold miners are stuck in a trading range, but are bearish in my book. Oil keeps losing ground, and with it, oil-related equities are continuing under selling pressure as well. And I'll take a look at XLB, which is a basic materials sector, and I'll show what I mean by a clear sell signal. And also some selling pressure in Apple, and I'll show what I mean by that. So, and let's take a look at well, that's Apple already, but okay, S&P 500. So I showed this chart several times in the past. The S&P 500 large cap index is bullish, and it's bullish from the daily chart, but you can see the prices are moving from the lower left to the upper right. So latest buy for us was on October 21st of this year, when the green Arun surged to 100, made a bump to the right there on the 21st, and we entered the market. We're up about, let me see, about 8.5% from our entry point. So far, we did take some profits, just because this run-up was so fast and severe. But you can see that price momentum oscillator is just beginning to roll over. So this probably would be a good place to take profits, or you could continue to keep position open for until the red Arun surges to 100 and makes a bump to the right. So at this point, position is still open in S&P 500. The Russell 2000 is a different animal than the S&P 500. You can see here, and I explained this before, this is a double top followed by lower highs and lower lows. Right here, we're at the critical juncture. This is it could go either way. If it makes a run for the highs, another couple of percentage points, then since October 7th, I consider the Russell 2000 to be in a downtrend. But should it make another high here, that would reverse. Therefore, it will become bullish again in my book. Alternatively, since it's still considered bearish in my book, should it roll over here to the downside, then this would be a good place to go for a short for me. And when that will happen is if the red Arun, see how here it made a top at 100. If it makes another top at 100, that would be a good place for me to go short. Hasn't happened yet. The interesting thing about the Russell 2000 is that it is surprisingly heavy in financial sector. About 24% of Russell 2000 is composed of various small cap financial firms, including the regional banks. And the regional banks recently have possibly broken out to the upside. The reason why that happened, I believe, is because of the bonds. When the interest rates drop, or rather when the interest rates rise, as when, for example, bond funds drop in price, then the regional banks, which make money by borrowing at the short-term rates and lending at the long-term rates, they make more money. If the longer-term rates are higher, the regional banks have higher profit margin. Therefore, since right here on the December 1st, looks like there was a peak in for this particular move. We made a purchase in AGG on 24th of November, but looks like here on the 1st of December, it rolled over to the downside. And today on Friday, we actually closed this position because you could see our rune right here. It made the top and made a bump to the right. So we closed this position. And, you know, it would make sense to for the regional banks to be breaking out, and as just as the interest rates are rising. We'll see if, I mean, the bonds are still in an uptrend, so, you know, for this uptrend to come into question, the bonds need to make a lower high on the daily charts. This hasn't happened yet. It's still very much bullish, and the uptrend is still intact. Treasuries, same thing. Treasuries are bullish, and you know, also have come under selling pressure. Right here on December 3rd, took some profits. We took some profits here, and also took some profits here on December 5th, which is today. So bonds are kind of coming under selling pressure of some sort. Not sure exactly why that's happening, but most likely because of the you know, various money printing in the world, and also because of the very good economic reports, especially the latest unemployment report on Friday. And unsurprisingly, gold and gold-related equities are under selling pressure as well. They were in the gold miners are in a long-term downtrend, no doubt about that. So this on the 14th of November was a counter trend bounce, but as a last week I mentioned, there was a short signal right here on November 28th. So we opened the position right here, around here. It's really gone nowhere. It's kind of, you know, go up and down, up and down. It's bearish in my book. You know, once, especially if it breaks support right here at about 1840, then it can easily retest the lows. So another 8% down and possibly break the lows. And who knows how low it will go. So I have a position open in DUST, D-U-S-T, which is an inverse ETF, 3 times leveraged inverse ETF for the gold miners. And we'll see where that goes. Oil continuous selling pressure. Doesn't look like there's any kind of end in sight yet. I don't see any end in sight. So that's about 30% drop or so. 32%, 33% drop from the latest short signal, July 11. No, Arun red is still at the top. So no Arun green at the top yet. So I don't see any price bottom in oil yet, especially with Saudi Arabia and OPEC deciding not to cut their production, so likely the prices will come under continuous pressure. Unsurprisingly, oil-related energy sector SPDR, XLE, with such holdings as ExxonMobil and Chevron, also came under severe selling pressure with a gap down. I explained this last week, and we did open a position here. We're about 2% profit right now. The most important thing is this: if it holds this level of what? Let me see, about 80-20 or so, 80-50, something around here. If it breaks this level right here, XLE will likely be under severe selling pressure and the price will accelerate to the downside. As of right now, it's still kind of just going back and forth here, but this is an important level to watch. If it breaks support at around $80, then literally all bets are off. It can go very low for XLE, energy-related sector, select sector SPDR. And coming to a close, I wanted to show XLB, material select sector SPDR. Also, same thing. Well, this one actually, the buy signal was on the 17th of October. Clearly, one of the weakest sectors out there, only up about 6% or so, 6 or 7% before the sell signal kicked in. And the sell signal right there, you can see red Arun surged to 100, made a bump to the right there. So right now it's in a sell signal, and some very aggressive traders can take it as a short signal. However, this is XLB is bullish. So to me, this would probably be a better time to just kind of sit on the side and wait for the next wave up, unless it completely collapses. Who knows? But at this point of the game, XLB is bullish, so this could be just a good waiting opportunity until the green rune surges to 100 and makes a bump to the right. And finally, Apple. Apple had just a great, tremendous run from the buy signal, about almost 18% up from the October 21st entry point. But right there on the 1st of December, came under selling pressure, down about 2%. And of course, the QQQ is down with it as well. So this is how the selling pressure looks like. PMO continued up and then rolled over right there. So that's a really nice place to take profits. You'll be up about 17%. It doesn't happen every time, but here's a good entry point as well. And then you would have been up about, let me see, about 18% as well. No, yeah, about 18%. And then, but you can see that once it rolls over, it doesn't mean it's the end of it. It means it's just not going up as hard and as fast. So, once PMO rolls over, you can see Arun is still at the top. And it's only right there on the 15th of October that it finally completely stopped going up. So for that particular move from 28th of April, you would have been at 27% should you waited for the Arun to turn. So taking profits when PMO rolls over is good, but it's probably even more profitable to take profits when Arun red surges to 100. That's it for now. And if you have a minute of your time, please connect to us, sign up for our mailing list. You can connect to us on Twitter, Facebook, or StockTwits. Send us a direct email. And of course, all of these charts that you just saw are located at this address on MasterCharts.com website. With that, thank you for watching and have another great trading week. Goodbye.